Good morning and welcome to the morning market brief. It's Wednesday, May the 7th, and I'm David Olujimi. Let's dive straight into the market headlines for yesterday. We saw the NGX All Share Index close at 108,361.10. It went up 1,662.60 points, representing a 1.56% gain yesterday. Basically, from the screen, we see that the NGX recorded its highest gain in a day this year, pushing it almost close to its all-time high, which is around 109,000 points. The market cap hit 68 trillion yesterday, and what we saw is that 13.8 we saw 475 million shares with a total traded value of 13.899 billion traded yesterday. Okay. With what we've seen in the market, from what we saw in the market yesterday, we've seen that the market is now slightly trending upward, with the bullish run now in full effect. This week we've seen a series of bullish runs in the market, in the NGX especially, considering market action taking place in respect to Q1 results that have been released. Some of the top movers in the NGX yesterday, we saw ETI, that's EcoBank Transnational Incorporated, record a 10% gain. We saw Nestle go up by 10%. Northern Nigeria's flour mill go up 10%. Beta Glass went up 9.98% to continue with its bullish run, and Austin Lars went up 9.94%. Some of our losers, we saw Guinea Insurance started with 8.70%, declined by 8.70%. Dark Communications went down by 6.78%. VFD Group went down by 6.59%. Then WAPIC, or Coronation Insurance, went down by 6.07%, and Regal Insurance went down by 4.69%. So before we move into the global market, let's review some of the top gainers from yesterday, as today's market is just about kicking in activities. If you look at a chart of Nestle over the past 5 years, you discover that Nestle is at a position where Nestle is currently trading at a 52-week high. The last time we saw Nestle at its current share price was sometime around June 2023. Basically, what that means is that Nestle at the time was trading at a price to earnings ratio of about 61x. Now, Nestle is about 31.8x after posting its historically high quarterly profit for Q1 2025. In Q1 2025, Nestle saw a profit after tax of about 30 billion, its highest ever on record. The last time Nestle had that kind of quarterly profit was in Q1 2023. How will the market react to this pricing? Historically, Nestle has not been known to be a cheap stock. If you look at the chart on your screen, you discover that Nestle traded around 1,500 naira, 1,600 naira, sometimes in 2020, 2021. At some point in history, for people who are very familiar with the market, we know that Nestle has been one of our most expensive stock, and at some point was even the most capitalized stock on the exchange before the listing of Dangote Cement. Now the question is, what are the upsides? Are there upsides to Nestle at the moment? Away from Nestle, we have Beta Glass, one of our always top performing industrial goods stock. This year we have seen Beta Glass with a 105% year-to-date gain. With a price to earnings of 5.85x, analysts will still argue that there is some massive upside to the Beta Glass stock. So Beta Glass is another stock that we will be looking out for in the coming days, coming weeks, and coming months. Then among the top losers, massive profit taking continues among insurance stocks. As we saw in our top loser stock, we saw Guinea Insurance, we saw WAPIC, that's Coronation Insurance, We also saw Regal Insurance, and those three made up our top 5 losers for yesterday. After hitting new highs in 2024, there's been a general bearish momentum on this insurance stock, and yet to date the NGX Insurance Index is down by 8%. Now let's move on to the most active stocks from yesterday's trading. As expected, financial services stocks. Access Holdings, with a traded volume of 103.9 million, leading to a trading value of 2.2 billion. GTCO Holdings, 37.985 million shares, leading to a trading value of 2.42 in actual cents, or in simpler terms, 2.42 billion worth of GTCO stocks were traded yesterday. Fidelity Bank was stirred with 30.73 million shares, and 1 billion of Fidelity Bank shares were traded yesterday. FCMB with 27.177 million shares, leading to 147.2 million worth of shares traded yesterday. United Capital with 26.184 million shares was also traded. Essentially, the top 5 traded shares of yesterday were all financial service sector shares. Now, away from the Nigerian market, we are going to be talking about the US. We are leading directly now to the US equities market. In the US yesterday, all the markets down. Dow Jones down by 0.95%, S&P 500 index down by 0.77%, and Nasdaq Composite Index down by 0.87%. Essentially, a bearish day in the American equities market. Why? So we'll say a combination of tariff uncertainty, stubborn inflation, and probably diminishing risk appetite led to a whole thing with sell-offs in the market. Plus, this was also compounded by oil prices that hit a 4-year low. Yesterday, on Monday, we saw oil prices go down to below $60 per barrel. In fact, the decline in oil prices on Monday led to a pause in some oil production in America. For example, some of the shale drillers, some of the people who drill shale oil in America, they had to start cutting down on their activities because they need oil prices to be between $60 and $71 per barrel for them to break even. So the US Energy Information Administration lowered its forecast, and it also warned that if there was oversupply of oil in the market, it could keep basically all the equities markets in the world on edge. Away from the US equities market, we shift our focus to the Asian market, the Asian Pacific market, where we saw some recent rebound, especially in the Korean market, that is the Kospi Index, and in the Hong Kong market, the Hang Seng Index. We saw a 0.55% uptick in the Kospi Index. We saw a 0.51% uptick. That's from early morning trading in those countries. Meanwhile, in Japan, in Nikkei, we saw just a slight 0.14%. Basically, what we are seeing, we've been seeing straight days, after 7 straight days of upticks in Japan, in the Japanese exchange. The Nikkei 225 went down just this morning with a 0.14% decline. The reason is because according to analysts, there's optimism in that country over trade talks that will be happening between the US and China, and also there's also some fresh policy support from the Chinese government. In South Korea, the rise we've been seeing is based on the fact that some heavyweight technology companies have been rallying, especially as export data is showing that there may be some shift in attention from China to South Korea. Basically, export data showing that there is modest headwinds for some of these countries. Their projections, especially for Q2, is showing that there may be an uptick in their revenue, uptick in their profits, if manufacturing volumes and export volumes start to shift from China to South Korea. Then in Hong Kong, which is in the Hong Kong Stock Exchange, which is tracked by the Hang Seng Index, the Hong Kong Stock Exchange is basically the largest exchange in China. There is hopes that the Chinese, that there will be an interest rate cut this week. Although China is presently facing some form of deflation, not inflation, as at their March deflation figures show that they had a deflation figure of 0.70%. However, due to the tariff measures put on by the American government, China is looking to shore up domestic demand, because how China's economy used to function was by export volume. But now China is looking to shore up domestic demand, and how they are looking to do that is by dropping interest rates that will allow people to borrow more and probably spend more, especially consumers. So there is in that market, there is a slight uptick, or there is a slight projection that if the interest rate cut happens, there will be increased sales for some of their big manufacturers and some of the big companies listed in that market. Now moving to Europe, in London, the FTSE 100, which tracks the London Stock Exchange, there was a slight ticking down by 0.14%. The day before, there was a 0.09% uptick, as there was bank earnings show that okay, the banks in the UK were doing slightly better than projected. However, we've seen the downside. We've seen a bearish run just yesterday, and this bearish run also continued in the French market. That's tracked by the CAC 40. In the CAC 40, what the energy and luxury goods, we have companies like Sanlam, and some of companies like LVMH, that's Louis Vuitton, Moet Hennessy. Some of those companies are the top trading stocks there, are some of the most capitalized stocks there. Essentially, we've been seeing quite a bit of underperforming. Investors are noting that there may be underperforming by these companies because of slower global growth, and it's also expected that due to the fact that there's this tariff war in America, there's the trade wars are also leading to people questioning the ability of some of, especially for the luxury goods company. People are questioning the ability of some of this luxury goods company to sell as much as they used to sell just some few months or few years ago. There is a worry about dampening consumer demand for this company. And in Germany, there was a slight uptick of 0.03% in the DAX index. However, the day before we saw a 0.55% decline. As we know, the German DAX index is highly sensitive to American and Chinese manufacturing data, based on the fact that a lot of German manufacturers actually do the manufacturing in China, and they do a lot of their selling in America. However, there's also a thing where there's anticipated rate cut by the European Central Bank. We don't know how this rate cut will happen. There is no information yet on whether this rate cut will happen, but the European Central Bank has been doing quite a bit of rate cuts over the last 1 year, and it's expected that they may pause on the rate cut. But this uncertainty has basically triggered some form of pause. There's really no huge market movement in the European market. Now back to Nigeria as we round up the show. What are some of the things we'll be expecting to see today? Basically, one of the things to watch today is the interest rate on our treasury bills. Today we are going to issue another treasury bill, and also we'll be tracking crude oil price fluctuation. We saw crude oil bounce back to $62 per barrel, that is Brent. For the Nigerian derivatives such as Bonny Light and Kwaibo, we've seen those crude oil trade at around $65 per barrel yesterday. But what will be today? considering the fact that the OPEC oil cut pause is about, we're seeing it kicking in June. Most of the countries in OPEC Plus have promised to ramp up oil production by June 10 to be more precise. What is the fate of Nigeria's oil industry? Those are some of the things that we'll be tracking today. How is the oil price going, and how are they affecting the global energy stocks, energy and financial stocks? Good morning, and thank you for being with us on the morning market brief on BusinessDay TV.